Welcome, everybody. Thanks so much for carving out 45 minutes with us today. My name is Michaela. I'm also joined by Mike Johnson. He will be driving our demonstration a little later today. So before we start, a couple quick housekeeping items. This session is being recorded. Every registrant will get the recording, so no need to worry about taking notes. Then, of course, drop any questions in the Q&A, and we'll definitely save those for the end. So kind of kicking off with our agenda here, I'll do a brief introduction for myself. And then I'll pass it to Mike. My name is Michaela Casey. I'm a solutions consultant here at Charted, a little bit newer to the pre-sales process. Prior to that, I did end-to-end NetSuite implementations for about 5.5 years. But I've been really enjoying the solutions consulting side of things. And then Mike, if you want to do a brief introduction as well.
Yeah, absolutely. My name's Mike Johnson. I am one of our product managers here at Charted. So I focus on our Invoice AI, which is our OCR solution for capturing invoices, as well as three-way match, which is the focus of today's webinar, and a couple of the other solutions that we have to offer. I've been with Charted for about 5 years now. I worked on our implementation team as well as our support team, so very familiar with our product and excited to be here today and show you some of the solutions that we have built and how that solves some problems specifically around fraud.
Sounds great. And then here we just have our agenda, so kind of where we're heading for the day. So first, we'll take a look at why AP fraud is hard to see. We're going to break it down into 4 specific fraud patterns that typically slip past manual and batch-based three-way match. Then I'll kind of point to where some of those blind spots might be. After that, I will pass it back to Mike, and he's going to take you inside of NetSuite for a live look at the three-way match functionality, which will help you kind of catch those fraudulent schemes before payment is processed. And then we'll close with 2 things that kind of most fraud conversations typically skip. So the vendor onboarding piece is your first control, and then we'll take a look at a framework for kind of going continuously without adding headcount or another system, and then we'll wrap it up with Q&A. Okay, so first up here, we have the foundations for fraud-resistant AP. So I want to plant that flag early because kind of everything that we're going to talk about today sort of builds on these 4 pillars. So first of which we have the real-time three-way match. So the invoice, the purchase order, and the item receipt are compared the moment the invoice arrives, not Friday, not month end, the moment that invoice is saved into the system. And those tolerances can be controlled based on quantity, rate, amount, and one or the other, a combination of the 3. And then that variance alerts before payment, because a variance you find after payment isn't necessarily control. It's more so kind of a stressful recovery project. So secondly, here we have the vendor onboarding controls. So that is the bank verification at setup and on every change. We have that duplicate vendor detection and a separation between who kind of sets the vendor up and who pays them. That kind of helps to streamline that process as well. Third option here, we have that embedded approval workflows. So those exceptions will route automatically, exceptions being when that variance is detected. That will route automatically to the right approver, and those variances will never bypass human review. So the system will handle that routine, and then humans will kind of come in and handle the judgment aspect of it. And last but not least here, probably the most important part is the NetSuite-native audit trail. So every match and approval logged in the system that you already run, it's going to be one system of record, no sync gaps between tools, because sync gaps are exactly kind of where those fraudsters will hide. So kind of just keep these 4 pillars in your head. Every scheme we're going to look at today will get stopped by at least one of these 4 pillars at the bare minimum. So we'll go ahead and jump forward to a quick poll. So before we show you the number, what is the median loss from a billing scheme? So we have a couple different options: under $10,000, 10,000 to 50,000, 50,000 to 100,000, and then over $100,000. So we'll give everyone a couple of seconds to kind of place their best guesses here, and then we'll kind of reveal the next answer on the slide, or on the following slide. Okay, great. We had about 20% said over 100K, 35% said in between that 50 to 100 range, and about 45% for the 10 to 50. So pretty evenly distributed. The answer is about 100,000 in median loss. So we'll kind of use this slide to sort of tell you what a pre-fraud actually looks like. So it looks like that duplicate invoice that slipped through, same vendor, same amount, invoice number might be off by one character. So it looks like a vendor bank change, maybe it came in by email, sounded urgent, nobody verified the information. Maybe the purchase order was matched to a receipt for goods that never actually showed up. So every one of those kind of looks like a normal day in AP. Nothing really flashes in red, nothing feels off, and that's kind of the point and the gap that fraudsters are looking to exploit. So kind of on to the numbers here. We have a couple snippets. So the Association of Certified Fraud Examiners publishes the definitive study on occupational fraud, and within their 2026 report to the nations, that found that asset misappropriation is the most common category of occupational fraud. So that's that 90% over 100,000 median loss that we were kind of looking at previously in the poll, 9 out of 10 cases here. So, and then looking under that umbrella, we have billing schemes. So those are things like fake invoices, duplicate invoices, shell vendor invoices. Those are kind of the most common and costly forms with the median loss of that kind of about $100,000 there. So half of these schemes cost more than that. And these schemes don't kind of happen all in one fell swoop. They kind of run quietly month after month, hiding inside your routine invoice volume. So kind of the controls that most teams rely on to catch these schemes is typically spreadsheets, email threads, and after the fact reconciliation. Our goal with our three-way match is to kind of fight that real-time problem with kind of a month-end toolkit to veer your team towards success. Okay, one more poll here. So we'll kind of make this about you guys again. So maybe taking a step back, think about how does your team perform three-way match today? Is it fully manual? Do you process it in batches, maybe a couple times a month, only above $1 threshold? Is it real time and automated, or maybe you don't three-way match at all? That's okay. We don't judge. So give that a couple seconds to come in, and then we'll take a look at the results. Okay, great. So we see about 30% are fully manual, 21% are only above a threshold, and then 37% real-time and automated. That's great. And then about 11%, they don't three-way match at all. So those are stats for today. And then we'll go ahead and I'll hand it back to Mike Johnson for kind of an overview of how the three-way match actually stops fraud. So kind of bringing in our real-time functionality here.
Yeah, thanks, Michaela. So just wanted to talk quickly about how Charted handles three-way match. So first of all, our three-way match is embedded inside of NetSuite. You'll see that here in just a second. So looking at our entire suite of products that we have to offer, the first thing that's going to happen is with Invoice AI, the invoice is going to come in and it's going to be scanned. That's going to allow us to capture information directly off that invoice to make sure that it's as accurate as possible. You're not relying on even manual keying. That can be very error prone. So we're going to get that information into NetSuite. We're going to capture the invoice number, the vendor. We're going to try to detect the PO number. If you have really strong processes and your vendors are putting PO numbers on your invoices, we're going to be able to extract that. That's going to lead into the real-time matching. So from that information that was extracted, we can then look at that purchase order that's inside of NetSuite, look at the item receipt that exists inside of NetSuite. We can see if there's any variances within the tolerances that you allow, and we'll talk about that just a little bit later. But from there, we're going to notify you and kind of escalate if there's any differences. I like to say this is the part of the process where we throw a foul on the play, there's a flag on the play, and someone needs to review those variances. Now, what you do with that escalation, there are some different options. Some companies will put that bill on payment hold because of the variance. Some companies will have additional steps in their approval process to escalate those variances and allow them to be reviewed as part of the overall entry process. However, you decide to resolve those variances and those discrepancies as part of your process, the last thing that's going to happen is the bill's still inside of NetSuite. Once it is fully approved, it's going to post to the system. And again, NetSuite maintains your system of record. So we try to make this as seamless and smooth as possible. Michaela said this is done in real time, so you're not having to worry about this in batch. Every single invoice gets to flow through these different steps in its journey from coming into the system, being scanned, all the way through being a posted transaction inside of NetSuite.
Great. Thanks so much, Mike. And now we'll kind of take a look at the four fraud patterns that we mentioned briefly at the beginning of the webinar. So this is kind of serves as the bulk of AP fraud losses, and each one is specifically engineered to beat those manual controls that about 30% of you said that you're utilizing today. So first off, we have pattern one, which is duplicate billing. So that is the instance in which the same invoice is submitted twice, maybe with a dash added to the invoice number, maybe a month apart. When matching is manual, the second copy lands on a different day, maybe on a different processor's desk, and sails right through that AP process. So the vendor and amount pairs, and then the invoice numbers are almost, but not quite identical. So that human scanning queue won't spot the dash discrepancy, and a system that kind of utilizes three-way match functionality will compare every invoice against the history that it is scanned previously, and it will kind of spot that duplicate billing immediately. Next up, we have pattern two. So those are shell vendors. So an insider will set up a fake vendor and pay your bills for services that maybe never existed. So the invoices are modest, plausible, and coded to accounts that nobody scrutinizes. The signal to kind of detect a shell vendor is vendors that have no purchase order history. So sparse master records, and then the classic tell is the bank details potentially overlap with another user. So this is why onboarding controls matter just as much as matching. The best time to catch a shell vendor is before it even exists. And then kind of the third pattern here is quantity inflation. So good example of this is you ordered 100 units, received 100, got billed for 115, or maybe the rate creeps up 3% per invoice. This scheme specifically exploits threshold-based matching. So the fraudster can learn your review threshold and kind of live under it. The signal here is the invoiced quantity exceeds both the purchase order and the receipt, or maybe you have kind of a recurring amount of small variances from the same vendor. Any single instance, this kind of just looks like noise. The pattern is unmistakable. So if someone is actually looking, we do have the ability to detect this kind of variance. So, and last but not least here, we have pattern four. So the purchase order and receipt manipulation. So this is the sneakiest one because on paper that match is clean, but someone with access, they record a receipt for goods that never arrived. Now the invoice, purchase order, item receipt, they all agree, and a traditional match would wave it through. So the signal we look for here is receipts and approvals entered by the same person. Sometimes those will be timed suspiciously close to invoice arrival, and this is why the segregation of the duties, which we allow for with kind of certain permission-based logic within some of our functionality and specifically three-way match, and this real-time audit trail that appears on transactions where variances are detected. This is kind of the only way to catch fraud that's been dressed up as a perfect match. So 4 patterns, every one of them is invisible to a spreadsheet. Every one of them is loud and obvious to a system watching every transaction in real time. So we'll kind of stop talking about it and we're going to go ahead and actually show you the functionality. So I will hand it back to Mike to take it away.
Awesome. Let me quickly switch our screen share here and jump into our demo account. And like Michaela said, we'll look at this in real time. So as you can see here, I am sharing my demo account here of NetSuite. Sorry, one more time. We are, as we mentioned earlier, or as I mentioned earlier, a NetSuite-native solution. So our different features are going to run inside of NetSuite and offer additional functionality to your standard core NetSuite products and core NetSuite processes. So we touched on vendor onboarding as part of this demo. It's not really the focus. I want to spend a lot of time talking about a three-way match if we can, but do want to quickly highlight that we do have a vendor onboarding solution. And like Michaela said, that's really the first line of defense to making sure that vendors come into the system, you're collecting the correct information, and you're not susceptible to some of those shell vendor fraud schemes that people will sometimes try to slip through or change bank details on the vendor file itself, on the invoice file itself, instead of relying on what you already have in the system. So with vendor onboarding, and we have had some recent webinars around vendor onboarding recently, I think you can go find those on our website, and I believe we're going to go ahead and drop one in the chat here for you if you'd like to get in any more detail or any more information on vendor onboarding. But essentially, this allows for a secure way to collect information, including bank information. It allows for an audit trail of storing those form responses on the vendor record so you can see when responses came in, when they were submitted, what information was supplied as part of that form response and applied to the vendor record. It ties in with approvals so you can see who approved this. You can even create separation of duties. In this case, I didn't do that, but you could create separation of duties where the person that creates the vendor and requests the vendor isn't the same person that's approving the vendor, right? So you have those additional controls to make sure that upfront, before you can ever create a purchase order, before it ever flows into the three-way match process, you have those controls in place to protect your system and protect yourself against fraud. So that is the first line of defense. I did want to highlight that before we jump into some of the other features that we're going to talk about here. So setting up your vendor, making sure all the information is correct, making sure that you have the required information and it's not just a few pieces of information enough to slip through. All of that's really important to feeding into things like creating the purchase order. Vendor onboarding, last thing I'll throw in there. Vendor onboarding can also keep this vendor as inactive. So that's another good control for three-way matching. If you keep a vendor as inactive until it's fully approved and onboarded, then you can't even create the purchase order, right? There's that additional level of systematic control. So the vendor isn't even eligible to be used on either a purchase order or a bill until it's through your full onboarding process. So after that happens and you have your vendor fully onboarded, you can then create purchase orders for those vendors. Those purchase orders can then be routed for approval as well. So we do recommend that as part of your overall process that you have additional levels of approval on the purchase order. Jumping forward to the AP process, right? So when the invoice is going to come into the system, this is when Invoice AI is going to take over. So as I mentioned on the chart at the beginning of the call here, all of your invoices are going to come into the system. They're going to be scanned by Invoice AI, and they're going to be available for processing within our inbox. There are two ways that you can get invoices into the inbox for scanning. The first way is through email. It's probably the most common ways that people are receiving invoices these days. Those can just be forwarded into NetSuite. We're going to scan those invoices. We're going to extract the information in a very consistent form, make sure that it's available for populating on the bill form and three-way matching of that data. Another option that you do have is you can just drag files into the system if they happen to be on your computer, and we'll still scan those in real time and have those available for processing. There are some additional controls that can help with fraud within the inbox, things like duplicate detection. So like Michaela said, if someone's trying to slip through the exact same invoice again, we can go ahead and flag those duplicates directly from the inbox so that it's very clear to a user that it's a duplicate if it's exactly the same and doesn't need to be processed. We also do have some high-level information about those purchase orders directly within the inbox. Things like what's the PO number that was extracted off of the invoice. You can actually see the status of the PO directly from the inbox as well. So something like this is actually pending billing. Here's a PO number that's in my demo account that I created that doesn't actually exist in the system. So again, that might be another fraud flag for fraud before I even get into a real-time three-way match to say, hey, why is that number showing up that doesn't exist in my system? Was this something that a vendor threw on the invoice or a fictitious vendor, a bad actor threw on the invoice to make it seem more legitimate? Like, hey, this was authorized spend, it had a PO, but that number doesn't even match an existing number in my system. So that can be another flag to you directly from the inbox. We do also have filters by statuses here within the inbox. So if you are a company that heavily uses POs and you want to kind of filter down by, what is pending billing, maybe what doesn't have a PO, what is not found, there's additional statuses that could exist in your account. Things like the PO exists, but it's not received yet. That could also create some questions, at least for the AP team, as to why is it not yet received? Is it just a backlog at our receiving department if you have a separate receiving department, or why are you receiving a bill before you've actually received the goods into the system? Those are a couple things that you can do directly for the inbox to help manage your process directly up front. When you actually dive into processing one of these invoices, that's going to take you into our split screen view. So I'm just going to click into the corresponding line. Within our split screen view, it's going to show me the invoice on the left side of the screen. And on the right side of the screen, it's going to load my vendor bill form, but it's going to go ahead and pre-populate it with all of the data that has been extracted from OCR. All of the quantities, all of the rates, all of the amounts that were extracted off of the invoice will be populated there for me. I'm not going to have to manually key those things myself. The nice thing about the three-way matching that's going to happen here is it does happen on save. So if there's the need for me to make a correction, because this loaded my standard NetSuite bill form, I'm able to still review the information. If I notice that something looks off as far as how this did populate on the bill form, I can still make corrections at this point of the game, right? So I could update a quantity, I could fix a rate or anything like that. And that's still okay, right? Because there are instances where you do need to make a correction. But to the point that our three-way match runs on save, that's also another opportunity for us to stop a bad actor. So if it does happen that there's someone in AP that's trying to manipulate the way that the bill is entered, even if it's different from how the invoices was scanned, you can still catch those corrections, right? So let's say I decided to make a correction here and I'm trying to inflate the quantity, right? And this is not 6. I'm trying to push this through to an 8 because maybe I know someone at this vendor and I'm trying to push through a little bit of a higher amount. That three-way match is going to happen on save. So as soon as I click the save button here, it's going to take into consideration everything that's on this bill record at the time of save. So even that 8 that I made as an adjustment here, it's going to validate the purchase order that's in the system. It's going to validate any item receipts that are in the system. And in this case, I put a lot of variances on this particular example just so we could kind of see what was going on here, right? So it's going to notify me of all of the different discrepancies that it found on this particular invoice, all the way from, quantity amount variances, comparing to item receipts. So have I received that amount? So all of that kind of information is displayed to me. The nice thing about our three-way match, the tolerances here are configurable. So we can set up tolerances for your business kind of at a standard, whatever your SOP might be. What's the typical case that you allow? That might be a 0% tolerance on things like quantity, rate, and amount. Sometimes you might want to allow for a little tolerance, and that's okay too. But we can define that standard operating procedure of 0%, 5%, whatever it is that you allow. But we can override that for specific use cases. So if there is a vendor that you work with that just because of the nature of your agreement, you have to allow for a little bit more variance, you can allow for that override without changing your standard default, right? So even though there's one vendor that you trust the relationship with that you need to allow for more variances, that doesn't open up yourself to fraud on other vendors inside of the system because it can be limited to just that one vendor. It can even be limited to a single item. So this actually happened before I joined Charted. I worked for an organization in a procurement department, and I remember that we had a typical rule that we never allowed overages on our purchase orders. So everything had to match exactly. However, there's this one item that we bought that was specifically made for us. It was a cardboard box that was made specifically for a special size, specifically for us. And we put in that order. It was part of our agreement that we had to accept up to, I believe it was 5% more than whatever we ordered. So even though everything else we didn't allow overages on that one item, we had to allow overages on. So that'd be a good example where we could build in an override for just that single item. The process wouldn't allow for other sort of things to slip through the cracks. We would just build in a 5% tolerance for that one item so that, again, someone didn't need to remember at the shipping dock or when billing that it was okay for that one to be over. It was just limited and the system wouldn't flag that one item because that was okay for it to have a little bit of overage as long as it wasn't more than that 5%. If it still crossed that 5% threshold, it would still require additional review. Now, once we notify you of variances, there are multiple things that can happen at this point. So one thing that the system can do is it can just prevent the bill from being entered altogether. That's a setting that we do have. If you choose for that option, then the Save with Variance button goes away. The user, maybe makes a note in the inbox as to why it can't be processed and leaves it until the variance is resolved. It's probably the most strict option, but some customers do need that level of strictness and do opt for that sort of resolution. Other things that you can do is allow the bill to be saved. And as far as the AP person is concerned that's entering the invoice here, they might not know what to do with all these variances. So maybe they can just create or record a quick comment. Maybe I'm going to have this as part of my approval process. So I'm just going to make a note that this is going to be sent for approval. I'm going to allow the variances to be reviewed as part of the approval process and decide whether the bill should continue through to be paid or additional action needs to be taken. So you can do that. You can have the bills, you can have the variance resolution kind of be part of your approval process, or you can also have it be part, or you can have the bill put on payment hold, and the bill is going to remain on payment hold until the variances are resolved or the payment hold is overheld. So there's multiple options here as to how you resolve the variances. Really, it's a little bit of a question of what works best for your business and your process. What does your company want to happen with some of these processes? So we're going to have the bill inside the system here. It's going to be available for reporting, but it's not actually posted to the general ledger yet. Remember, as part of our flow, we talked about there being approvals in place, and those approvals are actually going to stop the bill from posting until it's through the approval process that we might have. So I set up a quick approval process here to talk about how three-way match can tie into approvals. The first step that I put in my approval process is actually if there is a discrepancy, if there's a variance, I might want to route it back to the PO requester. So that could be someone that I listed on the purchase order record directly. I want to potentially route it back to them, have them review the variances, have them review any issues that were detected before I do anything else with this particular bill. So that approval email that's going to go out, it's going to be sent directly to the approver's email. The nice thing about our approval emails are they are customizable, so you can actually configure what information is displayed in the body of that email. In my particular approval email, I actually put the discrepancies right within the body of the email. So here's an example of that approval email that just came to me as this particular approver. You can see how it includes information about the bill and how it was entered into NetSuite, but I also had it bring in the variances, right? So this can be very clear, and this can be triggered only when there are variances detected on a bill that'll include this extra information. So as an approver, using our approval solution, not only do I have the ability to easily approve outside of the system directly from the email, but I also have visibility into what the issues were without needing to get into the system. So as the approver, review all the information. I can even review a copy of the invoice. So I can preview that directly from the email here. My preview never wants to work when I'm doing a screen share, but you can see that it's a PDF attachment. Preview the email, preview the attachment. If everything looks good to me, maybe our process is just as long as the approver approves the email, the variances, then nothing else needs to happen. You're still getting multiple eyes on that invoice before it goes into the system to, again, stop some of those fraudulent schemes that can exist out there. So let's say I approve this email or approve this invoice. You can have multiple steps in your approval process. So if you're not familiar with our approvals, they are very flexible. You can, route through matrix-based approvals. You can even have things where maybe something comes into the system and it does have a perfect three-way match. You could have a process that says, hey, that doesn't need approval. We know that it matches the PO. We know that there's no discrepancies. Let's go ahead and allow that to go through without needing to clog up our users, our business users with approvals that they don't need to make. So it's very flexible to match whatever your business processes is and what your organization feels comfortable with. One more example that I want to quickly jump back to and show from the inbox. Some of the people here on the call might say, hey, I'm not really purchasing physical goods. I'm purchasing services or non-inventory items. How does this matching work for me? Or what are things out there that people are doing to help make sure that we're not overspending? So this is another use case for matching in our three-way match engine inside of NetSuite. So maybe you're an organization that creates or are purchasing services and you want to start creating purchase orders to track those services. So a lot of organizations will do is they'll set up a purchase order that'll look something like this right here. I like to refer to it, and this is my term. I don't know if this is a technical term or not, but I call it kind of like a quasi purchase order. So it's not, there is a thing I'm sorry, a quasi blanket purchase order. There is a thing of a blanket purchase order inside of NetSuite that has a very particular purchase. But if all your organization is trying to do is say, hey, I expect to spend $50,000 on consulting services with this particular vendor, you can actually enter that into NetSuite and leverage a little trick here where you actually flop the quantity and the rate from what most people think of this as. So in NetSuite, NetSuite considers a purchase order fully consumed when the quantity is gone, not necessarily when the rate is gone. So if I would have set up this purchase order with a rate of one and a quantity of $50,000, as soon as I billed one time against that PO, NetSuite would have just thought, hey, you got a really good deal on the one thing that you were expecting to buy, and it would have closed out that PO. So by flopping these two different kind of pieces and saying, hey, let's treat this as the currency, let's have a quantity of 50,000 and a rate of one, essentially allows me to bill this purchase order down in dollar or fractional increments to make sure that I don't spend more than the total, let's say it's $50,000 on whatever the purpose of this particular PO was. So tying that back into Invoice AI, we actually have functionality built into our solution that kind of looks for this setup because it is a pretty common practice inside of NetSuite. So what we can actually do here is when we detect that there's a PO that has that sort of single line rate of one setup, we'll take the total of the bill here and we'll go ahead and drop that in the quantity field. That's what the user would be doing anyways. In this use case, it's not as focused on the line level breakout. It's more looking at a total level breakout, but that can still tie into three-way match discrepancies, right? So on this, let's say someone tried to double bill me, right? And that second bill pushes me over the total of the 50,000 that I expected to spend. That's going to also trigger a three-way match discrepancy. In this case, it's not because this is the first bill that I've entered against this particular purchase order, but you can see that matching is still going to run. It's going to match back against that purchase order. And if for some reason it goes over that total that I expected to spend, I still have that extra level of control. So keep this in the back of your mind. If you're an organization that says, hey, I'm not purchasing a bunch of physical goods, so three-way match really isn't that important to me, you might want to look at something like this to help provide additional controls to your system, or this might be a portion of your bills, right? Where some of your bills, this kind of use case more applies. You're not doing a real three-way match, maybe it's more of a two-way match, but you still want to make sure that you're not opening yourself up to additional uh, fraudulent activity that could happen. So that's all I have to show on our demo here today. Obviously, once the bill is approved, payment takes over. We do have payment automation that can help with paying your vendors through different means. There's also other options for payment that can take place. So that's going to happen downstream, but all of this is going to can make sure that you have those checks and balances in place so the bill never even gets to the point of being paid before you've gone through all of your controls. So with that, we're going to jump back over to our PowerPoint and we'll wrap up with a few more slides. Mm.
Great. Thanks so much for the great demo, Mike. So kind of recapping some of the things that we went through and discussed within the demonstration. So fraud prevention really starts before that first invoice. So while the match has the capability to catch those fraudulent invoices, the onboarding controls are what really stops those fraudulent vendors from ever existing in the first place. So three things we kind of recommend locking down at setup. First of which is verifying the bank account ownership. So at onboarding, and again at every change request, the urgent bank update email is one of the most common and expensive attacks in AP today. And that verification on change can help businesses significantly to prevent this from happening. Secondly, we have the option to enable duplicate vendor detection. So those shell vendors love to hide behind near identical records because those two records kind of means that there's two places for those fake invoices to live. So this really helps to catch it at that initial creation point. And then last but not least here, we have enforced segregation of duties. So the person who creates the vendor should never be the one to release the payments to the vendor. So most of those kind of insider billing schemes that we touched on previously, those would require one person to control both ends of those processes. So, and then on the right-hand side here, we have the first and the $0. So onboarding is always your first line of defense. And then the goal is $0 ever paid to an unverified bank account. And we'll wrap it up with a few key takeaways. So 4 things to walk away with, one of which fraud hides in those routine transactions. Duplicates, shell vendors, inflated quantities, those will always look like ordinary bills. These controls that are typically designed for obvious fraud are going to miss the fraud that actually happens. We have the second kind of key takeaway here. The real-time matching is going to help every time. So batch and threshold-based matching create windows for those fraudsters, and the exception-based real-time matching kind of closes those windows before that payment is ever released. So just something to keep in mind there. We have onboarding as your first control. So again, that bank verification, vendor duplicate detection, segregation of duties at setup, those matter just as much as the initial or the matching of the transactions. And then we have the ability to kind of go continuous without going bigger. So not adding headcount or an additional system. So that NetSuite-native or NetSuite-native three-way match replaces those spreadsheets entirely, no more email threads. And then, of course, we're kind of, again, avoiding that additional headcount or an external system to manage. So here, if you have any questions about your own AP controls, you're welcome to kind of scan the QR code to access one of our, I believe this is one of our demonstrations. If you always want us to walk through maybe your specific use case, we're always happy to set up kind of a live demo to kind of work through your blind spots in real time. Thank you all for spending 45 minutes with us. I think we have about 5 minutes left for questions. So Mike and I will take a look at what's coming in. We'll kind of answer them as they come. All right. So we have a question from Whitney. Do approvers need a NetSuite license? Mike, if you want to take that one, I'm also happy to answer it as well.
Yep, it's good. Yeah, so no, approvers do not need a license. That's one of the advantages to using our approval solution. Those approval emails are going to be sent directly to the approver. They, as I kind of showed you in that email that I had there, gives them all the information they need to approve. They can just click the approve button directly from the email, and that will capture their response. I didn't really show it, but they can even enter an approval or rejection comment, right? So sometimes there is the need to reject, and while we're talking about fraud, that's definitely something we should highlight too, right? An approver could say, hey, this is not legitimate, and they can enter their rejection reason directly from that email. They do not need access to NetSuite. They can do it directly from the email itself.
Yeah, absolutely. I'd say that's probably one of the top 3 highlights of our approval automation functionality.
Yep,
And
absolutely.
then next up here, we have if my NetSuite setup is bill before receipt, so they allow for that, I would assume within accounting preferences, will it do three-way match after receipt or at a later date?
It's a good question. So we do have the ability, if that is a setting that you have enabled inside of NetSuite, we can support that. Kind of the standard flow for most people on the call is probably requiring the bill to be entered. I'm sorry, the receipt to be entered before the bill can even be entered, but there is an option inside of NetSuite to allow the bill to be entered. And we do have a background process that can run every so often to essentially check for those new item receipts. We can still flag there as being a variance to say, hey, there was no item receipt when the bill was entered. But if that item receipt is entered after the fact, it would resolve that variance. That's pretty typical for, I mentioned there's a couple different options you have for what you do when there are variances. I see a lot of companies go with let's put the bill on payment hold when they want to do that. So the bill is going to come to the system. It's going to automatically check the payment hold box, and the system's going to check every so often and see when that variance is resolved before letting it kind of go through the rest of the process. So it can be done if that's a setting that you have enabled.
And I think we have time for one more question before we start to wrap up for the day. Does your system handle landed freight cost?
We we would defer to NetSuite on kind of capturing the landed freight cost and some of the calculations there. So I think we probably need to follow up a little bit more on what your use case is there for the person that asked that question. And we do get a copy of these, so we can follow up a little bit more after the fact. But we are using the native NetSuite bill form. So as far as having the options to capture landed freight and how that NetSuite functionality works, that's definitely supported as part of our overall solution and the um, the entry process for landed freight. So not sure if that directly answers the question, but if there's more that we need to provide there, we can definitely follow up with you.
Yeah, absolutely. And then one last one here. It says, does this replace NetSuite's scanned vendor bill tool?
Absolutely. So if you're using our solution, we offer our own OCR solution, which we call Invoice AI. I demoed that here today. You would not need to have bill capture or another OCR solution. All of it would exist within our solution, and we would help you through the entire process, kind of the end-to-end AP automation flow. Again, we didn't highlight it as much today, but we can't even do vendor onboarding. And something else we didn't cover today, we can even take things through automating some of your accrual needs. So if you're not familiar with our full suite of offerings, definitely reach out and see what we have to offer. But most directly, this entire solution that we talked about here today would replace the need for, bill capture or another OCR solution.
Yeah. Great. Thanks so much, Mike, and thank you everybody for spending 45 minutes with us. We will send the recording and slides to your inbox. And remember, fraud doesn't always look like fraud, so the goal isn't to catch it after the fact. We want to kind of stop it before it pays. So we hope to see you all next time, and thank you for joining today's session.